Hey everybody, JD here with your Rational Trader Market Analysis Daily. In today's video, attacking the market one day at a time. Well, the great American stock market meltdown continues. Stocks are moving higher once again today. Another day of relative quiet on the economic data front, and thus the risk on trade remains firmly intact as we wait for the Federal Reserve decision on interest rates. Pretty much baked in the cake right now for a 25 basis point cut, although the justification for a larger rate cut is certainly there. Will the Federal Reserve do what they should do? I could make an argument for a 100 to even 200 basis points of cuts all at one time, but that's not how the Federal Reserve likes to play this little game of monetary policy. So, what does it all mean? Well, it means you can really come into the water. The water's warm and the trade is to the upside. Risk on is intact. And what is there to stop it? We may get a sell the news sort of event when the Federal Reserve does meet this week, but I'm not counting on that. The power of this rally is really quite spectacular. We've seen this all before in the late 1990s during the dot-com bubble. And really back then, before it was called a bubble, it was called a boom. Uh, then it was irrational exuberance, which, by the way, the chair at that time, Alan Greenspan, noted that the markets were irrationally exuberant. Care to guess when that was? 1996. Care to guess when the market actually crashed? Well, it was sometime after the year 2000. So, these sorts of melt up markets can last for a long time. Now, I'm not comfortable riding a magic carpet. It freaks me out, to be quite honest. So I prefer to attack the market one day at a time, and I'm doing that with our daily arbitrage trade. Today, the daily arbitrage factor score was zero, suggesting a move today near the flat line. And at the open, you can see here the SPY spiked just 30 minutes after trading up to, oh, it was about 50 basis points higher at that time. And that was the time where we could fade the rally again. That's what the arbitrage is. If the factor score is suggesting a flat day and the market's up 50 bips, well, the difference between 50 and zero is the potential profit gain from an arbitrage trade. So I looked at the SPY daily expiration put debit spread, looking at a 661, 660 today. Now, I was flying in the dark a little bit without access to real-time option quotes. Uh, but I figured out pretty much what the suggested put debit spread was trading for. Looking at it at the time, uh, again with delayed quotes, I was looking at prices well above 50 cents for that trade to be placed. Didn't like that construct, wanted to get in under 50 cents, was able to uh, close, or I'm sorry, enter the trade for 44 cents ultimately. And really, you saw a sideways moving market until the afternoon when the SPY did dip down here right before 3 o'clock Eastern time. And that gave us the opportunity to exit our trade with about a 70% gain for the day. So, really, this is what I mean by attacking the market on a day-to-day basis. Certainly, ride that melt up. I have no qualms doing that. But again, it does make me nervous riding a magic carpet ride. So instead, I'm going to be looking and leaning very hard on the daily arbitrage trade, and I think you should as well. That's all I have for today, folks. This is JD for The Rational Trader. I'll be back tomorrow with another video. Take care. Have a great day. Good luck with all of your trading, and we'll see you all next time.